Okay, so many of you may not know this, but until 2012, I was actually in stockbroking for almost 10 years. But I turned away from the dark side and I moved to property. And a debate that I would often be drawn into is what's the best investment property? Gold, shares, or property? What's the best investment? When it comes to investing, your options are pretty boundless. I mean, you've got crypto, you've got savings, commodities, commercial properties, so many more. But the three big investment options remain residential property, shares, and gold. So, how have they stacked over the last 20 years? Let's go into that a little bit more. So, shares are the go-to for beginners. They're the first thing I did. They're affordable to start with, and they're simple to trade. They thrive during economic booms and political calm, but watch out, prices can plummet fast during slowdowns, instability, and global crises. And I definitely saw that when I was in stockbroking. Gold flips the script because it shines in turbulent times, surging when uncertainty hits. But when confidence returns to the market, gold often starts to soften, it stalls, or it dips as investors chase other, more lucrative opportunities. With over 3 million investors owning properties across the total value of Australia now tipping $3 trillion, residential property reigns supreme. But how does it perform compared to shares and gold over the past 2 decades? Let's have a look. So if we look at this chart here over the last 20 years, shares, which you can see are the blue line, that's the indexed share price, and they've soared before the 2008 GFC, then they crashed. They since have ridden a bit of a roller coaster, slumping during COVID, recovering, and then dipping again. Gold, which you can see is the yellow line there, that's indexed gold. Gold climbed during the GFC and it spiked again with COVID, but stagnated in between. Recently, economic kind of jitters, I guess, and conflicts in places like the Ukraine and other areas in Gaza, they've definitely sent gold prices soaring again. Housing. It is definitely the steady climber. You can see that green line. Apart from a minor dip kind of in 2012, property values have risen consistently. There's no wild swings here. So why is housing the winner? Well, shares and gold have had their moments of glory and gloom, but housing stands out as a less volatile and more dependable investment. Plus, there's a bonus. While gold only pays off when prices rise, housing delivers rent and shares also offer dividends. They've also got depreciation for property and franked dividends for shares. So similar in that respect. Around 2 to 6% returns, regardless kind of price trends. Over 20 years, shares have lagged in price growth. Gold shines the brightest, but housing strikes the balance. Reliable gains plus steady income. For sustainability and returns, in my obvious, unbiased opinion, property is pretty tough to beat.